think I have Ebola. I'm not sure. I have something around me. No, I had the flu, so I can't go outside, so I'm going to make a different video today. Listen, we are about to go into every single detail that I can find out about for car finance. The ways of financing, how you finance and how you get a loan, what you need to do, what you need to look out for, all the do's and don'ts. If you like this kind of video and you think it's worthwhile, hit the subscribe button, hit the like button and leave me a comment down below. The research involved in this required acres of pages. It's a very complicated subject. We're going to try and drill it down to its component parts and make it as simple as I possibly can for you. A huge thank you to my wife, who has the patience of Job when it comes to this sort of stuff. I get tick and just ring somebody. These are all of the different kinds of finance options you can have on the market in Ireland today. At the time of going to press with this, the numbers were correct. So this, if you're watching this in 10 years from now, the numbers are probably meaningless. But right now, what first of all we have to do is clear up what is car finance and the different kind of options you can have. And I'm going to start with the most complicated, the most deadly and the most dangerous to your future, PCP. Why do I say it's most dangerous? Well, you know what? It's complicated. It sounds simple on the face of it, but actually when you start prodding around inside it, it's a pretty complicated product. And it can go disastrously wrong for you, your family, your finances, and your car. Right, let's find out how you do it. First of all, PCP is short for Personal Contract Plan. So it's a personal plan, and it's a contract between you and somebody else. Remember that. It's actually, broadly speaking, similar to a hire purchase agreement. It's just taken away a few little bits out of it. It's complex in comparison to other types of finance, in generally speaking, and how it operates. And it's very easy to become bewildered or a little bit befuddled in the middle of it when you're actually signing up for stuff, you know, because there's lots to sign up for. I want you to stamp this on the inside of your eyeball, so when you blink you see this when you're thinking about a contract plan. Read the fine print. Understand what you are getting involved in. If you make a mistake here, it's going to cost your financial security in your future. I'm just telling you that now for your own safety. Do not just dismiss this as being, oh, well, you know, it's just another finance thing. Why am I going into such very careful details? Because PCP was sold to a lot of modern journalists as being something that's very simple, it's very consumer friendly, you know, it's good for the consumer will buy more, and sure enough, the consumer has bought in. But let me explain to you what happens when things go wrong. So on the face of it, PCP can seem very attractive because they usually have a low monthly repayment. So they work it out so that the monthly repayments that they're selling the car on, so when you walk in, it goes 200 quid a month for that car. Wow, that's so cheap. They're not telling you about the trade-in, and they're not telling you about the balloon payment at the end. PCPs are also desperately convenient. So you go into a dealership, any dealership pretty much in the country, you like the car, it's right there. The little dealer fella who's able to sell you the car can also sort out your finance there and then. Or we'll have a finance person on site that'll sort it out for you. But it can be done as a one-stop shop effort. So when you walk in, you walk out, and you've bought a car. End of story. So I'm going to continue to say this every once in a while. Understand the terms and conditions you're getting into. Don't rely on just what I'm telling you in this video. The major difference between PCP and hire purchase is that you pay less of the amount owed during the PCP agreement. Understand that? So the monthly payments you're paying are of a lesser amount than hire purchase. So it seems really attractive because you're paying less per month. But actually the finance agreement winds up to be kind of the similar at the other end. The big problem with PCP is when you get to the other end of a PCP contract in 3 years' time, you still owe a considerable amount in a balloon payment. It can be a big amount. And if you're not prepared for it, well, it can be quite scary. If you start thinking about it in the last 6 or 5 months before the end of the contract, it's hard to scrape together, lads. It'd be very hard to scrape together 10 or 15 or 20,000 euro at that point if it's a big expensive car. Just remember that. Okay, so there are 3 parts to a PCP agreement. There's the deposit. Deposit can be just cash. You walk in with cash, done, finished, right? You pay it out, whatever way your deposit comes. It can also be part trade-in, part cash, you can be part blah, you can be all sorts of things. Second part is a monthly repayment. So for the next 3 years, your ass belongs to that payment plan, okay? It has to be paid. And the third part, the final lump sum payment. This is called a guaranteed minimum future value. That's the GMFV. We'll come to that part in a minute. The deposit is usually 10 to 30% of the value of the car. It can be made up of cash and a trade-in, just cash, just a trade-in, whatever way it works out, okay? But 10 to 30% of the value of the car is going to be the deposit. The monthly repayments are usually done over 3 years. It can be turn out to be looking quite low, generally making them seem very affordable. So PCPs always seem really affordable. The guaranteed minimum future value, lump sum, has to be paid before you can own the car. At the end of it, so when you've done your 3 years, done your deposit, you did your 3 years, the end of the 3 years, you're confronted with fairly straightforward answers. You pay off the guaranteed minimum future value, whatever that is. The car is now yours. You can burn it on the forecourt, you can drive it off a cliff. It's now yours. You owe no more, and you've made all your financial payments all the way through, so it's absolute zero, and you sign off your contract at the end. Now the car is yours to keep forever. 2, you don't fancy that, you don't like the car anymore. Ooh, I think I'll enter a new PCP agreement. So what happens then? The car is now the guaranteed minimum future value, so that pays off the last payment of your PCP. You finance a new deposit, or you get a new deposit for yourself, and you start another PCP on a whole new car. The option 3 is you bring the car back to the dealership and you go, look, I'm finished. I cannot afford to pay nothing here. This car is no good to me, and the dealer takes it back, and that pays off your guaranteed minimum future value. That all sounds blue sky thinking, in the clouds. Everything is wonderful in my world. Here's the things to be aware of. Here's the things that's going to trip you up in 3 years' time. Here's the things that you, and if you're not looking out for this, you will be hung by. Questions to ask. What are the mileage limits, and what happens when I go over them? Often PCPs come with this idea that you can only do 30,000 kilometers a year, 50,000, 40,000, 20,000. Different finance options come up for the amount of mileage you want to do. Now that's fine, that's okay, that's quite normal for them to say, listen, your maximum per year for the next 3 years has to be 30,000 kilometers. So when it comes back in, the car should have 60,000 kilometers on the clock, no more. Now what happens if it has 70,000? What happens then? You need to know the answer to that question. That question can vary around from anything to anything else. It changes the GMV-FV. It changes that as well because the mileage is higher. So you may end up owing more money at the end than the balloon payment started out with. Are there rules about servicing the car? That's a vital question as well. Do I have to come to this dealership, or can I go to any dealership to have the car serviced? And is there a service plan? Can you include that in the PCP? Can you include a 4-year, 5-year, 6-year service plan in the PCP so I don't have to worry about the price of the servicing? Or do I have to pay for each individual service here? Does it have to be in this dealership? Is it only over the 3 years, or do I have to come here for 5 years over the length of the warranty of the car? That's all stuff you got to work out. Okay, so write that stuff down. Here's a tricky one. Absolutely no one else has mentioned this on any website, and I have to give my wife credit to find out this one as well. This has not been mentioned in any other article. Do you require comprehensive insurance to have a PCP? Most probably the answer is yes. If you've never had comprehensive insurance before, you might find it difficult to get it, especially if you're looking at an electric car. But that's neither here nor there. Do you need it for the PCP? Is it a vitally important piece of equipment for you to have to get it? If you don't have it before, then you should have comprehensive insurance. Do I need it? Will you be able to pay the GMFV, the guaranteed minimum future value? Will you today, if I said to you today, give me a deposit, give me 3 years worth of finance, do you have 15,000 euro to give me right now to pay off that car? If the answer to that is no, or if the answer to that is maybe over the next 3 years I could save that much, you're going to have to come up with a financial plan to save that money. You need that cash in 3 years' time. Don't let any dealer tell you one way or the other, that's just fine. You just roll it over into another. Don't have the money. You don't know where you're going to be in 3 years' time. Are you going to be employed? Have you switched jobs? Are you moving? Are you leaving the country? Are you living in Dublin currently, but you're moving to Cork? Does that affect the mileage? The mileage thing per year, is that going to be affected? This is something I need you to write down as well. Any missed payments during the agreement will show up in your credit rating. You may find it very difficult to get a loan in future. Any missed payments, even if you finished it, even if you actually went through the 3 years, finished the balloon payment, the whole lot, but you missed June 2019. You didn't mean to. Money coming in and going out. No, I just didn't quite make that payment right there. Nope, that's going on your credit rating. A website we're going to give it a shout out to is mypcp.ie. There's quite a lot of stuff listed out there on that website. We did use that one amongst others. We did go through a number of websites and make hundreds of bloody phone calls to get all this information together. And you're even going to go through APRs and all sorts of stuff. So right, stick with me. Pause now for a minute and think back to PCP. So I want you to pause the video and think back on PCP. Do you want to watch that again? Just go back across that again. There's a lot of information on PCP. It's the most popular finance package in Ireland, And if you're even considering it at the moment, you need to know all of the details of PCP. So go back across that little segment and leave a little section down below in a comment and tell me what you think, or do you have any more questions? I still look like death warmed up. Anyway, right, let's move on with the second kind of loan you can have. Now we're going to go into a one which is a little bit trickier. It's if you're financing a cheaper car, used car, you can get a personal loan, right? Now, a personal loan is different from a car finance loan. It's different from, you're the collateral on a personal loan. Your income, your house, your chattels is actually called, okay? But personal loans are offered by more people than PCPs, okay? So personal loans are offered by banks and building societies, finance companies, and credit unions. They all offer personal loans, okay? The good part of personal loans, you can borrow a set amount of money over a set number of years, typically 3 or 5 years, okay? So that's pretty good. See, you get a set amount of money and you know it's coming over 3-5 years and you pay it back without a balloon payment. So personal loans tend to be a set amount of money every single month going out until you're finished. If the lender approves the loan and they work out your monthly repayments, you must pay this amount and interest to clear your loan in the agreed time. So if you sit down with your bank, your credit union, whatever it is, you say, I want 20 grand. They go, right, 20 grand over 5 years is going to cost you this per month. Now you must clear every single month of that. You can't default, you can't defer, you can't mess it around. But you can stretch the loan. You make the loan longer, essentially. So you can bring the payments down without missing any and make the loan longer. Won't add to your credit rate. You can repay a personal loan with a standing order if you want. You can also do it by direct debit from your current account. So the money that's going into your current account every month that you get paid by your employer, you can set up a direct debit or a standing order to go straight out to that, and that's it's covered under your normal routine. The APR is a bit weird on personal loans. It can be anywhere from 7.5% to 14%. It can be quite high. Any loan over 2.5 grand tends to attract those kind of rates. Here's one we discovered when we were trawling around as well. By law, a credit union can't charge more than 12.68% APR. So even if the interest rate went wild, into the sky wild, up to like 17 or 18%, a credit union can't charge that. It can only charge 12.68%. It's worth thinking about. Personal loans are more flexible if interest rate is variable. Okay, so you can mess around. If you go with a variable rate, you can mess around with the loan itself. So you can pay off the loan earlier than you planned. So if you planned to have a 5-year loan and you went, you know what, I got a raise in work, I won a bit of lottery money, bang, you can pay off the loan a little bit earlier. It's fine, and there shouldn't be any penalties in that. But please ask your financial institution whether there is a penalty for early payment. There usually isn't. It's called a settlement fee, so you can ring up at any point. If you want to talk to a financial institution, ring up your bank and go, hello, my name is XYZ, here's my account number, I need a settlement fee on my loan, please. And they will give you a total amount that you could pay them today and the loan will go to zero. That's called a settlement fee. You can also reduce your payments for a time. It's flexible. If you go with flexible variable rates, it's very flexible. So you can reduce your payments by extending the loan time. So instead of paying over 3 years, you can pay it over 5 years. It will bring your payments down. You still pay the same amount, but the loan goes on a bit longer. So personal loans are actually pretty good as long as you're not financing a brand new car. If you're financing a used car, a bit of a problem. Okay, so that is personal loans. Pause again, go back over that. Do you want to go through that again? Have a listen to everything I said about personal loans and whether the difference is there or not. If you've got a question on personal loans, leave it in the comments down below. Over PCP, personal loans are a lot more flexible. PCPs are rigid. You cannot change your mind on a PCP and mess around with the way they are, okay? So you're kind of stuck with them sort of things. Okay, welcome back. Hopefully that pause was good for you. You maybe watched an ad in the middle of that. You maybe hit the subscribe button or something. But besides that, we're going to move on now with hire purchase. So hire purchase over the years got a really bad name, usually because the interest rates were up the wazoo and people couldn't pay them. 17, 18, 19% interest and more. And people were ripped off left, right and centre, and they lost their bleeding houses because of these things. Okay, hire purchase will dog you forever. Finance will dog you forever. Okay, so hire purchase agreement. Many of the car finance loans offered by garages and some lenders are hire purchase agreements. You actually have more people offering hire purchase now than offering PCP. Even the smaller garages will offer hire purchase, and almost all the banks will offer hire purchase in some or another. Under hire purchase, and I want you to write this down again, another thing to write down for yourself. Under hire purchase, you hire the car. It's not your car. You hired it from the hire company, essentially. You pay an agreed amount in monthly repayments like you do with PCP, you become the legal owner at the end of all of the agreement. So some hire purchases have balloon payments, other hire purchases don't have balloon payments. You cannot sell the car without the finance company's permission before the term is up. You can't. Doesn't matter if the term is 5 years, if the term is 50 years. You will have to hold on to that car until the payments are made. You cannot sell the car halfway through the agreement. You cannot trade it in on something else, nothing. The car is owned by the finance company, not you. To sum that little bit up, the car dealer that you're buying the car from sells the car to the finance company. The finance company then rent the car to you. That's how hire purchase works. You have agreed in a hire purchase agreement to rent the car from the finance company for the length of the agreement. There may be a balloon payment at the end, but you probably won't have the same problems as the PCP in the servicing and the, you know, all these other agreements come with the mileage agreement, all that sort of stuff. Finance companies don't tend to really care about the mileage on the car. They do, but they don't as much. It's not quite a sticking point so hard, and you don't have to worry about the guaranteed minimum future value of the car because you have to pay for it no matter what. Hire purchase is by far and away the clearest. Isn't that the weirdest thing ever? I mean, when you think of PCP and personal loans and all that sort of stuff, hire purchase is essentially the best version of the whole lot of them. Personal loans is the same as a motor loan. A lot of banks don't do motor loans anymore in the same way they used to. They just do hire purchase agreements or PCP, but they call it a motor loan. Hire purchase agreements tend to be done through finance companies. Please remember, hire purchase is really straightforward, but if you mess it up, you're going to be very, very sorry in the future when you try and look for anything else, because when you look for something else, you're never going to get any more finance. So if you miss a payment, you fall behind the payment, interest rates goes out of your scheme, nothing. None of that is going to get you off the hook when it comes to how much you owe. So that's the end of hire purchase. Please pause it again, go back through hire purchase, see what you think through hire purchase. Again, you're going to have to look at the interest rates yourselves. There's such a variety of interest rates, it'd be impossible to list them all out for you. But, you know, look back across that hire purchase. Leave me a comment if you have any questions about hire purchase. Most of the hire purchase agreements that apply here apply across Europe, no difference. And generally speaking, they're kind of the same in America as well. Hire purchase works the same pretty much worldwide. The essential ingredients of it remain the same. PCP doesn't work the same worldwide. It can be different in all kinds of reasons, and it isn't even in a lot of countries. And personal loans are all over the place worldwide, but I'll answer any questions you possibly have. Moving on, we're going to go through loan calculators. So what we've done is we've tried to figure out who has the best finance option out there for your car. So if you're looking for a car right now, what would be the cheapest way to get your car financed? What is the best ones out there? Now, this is not a review of the financial institution. I'm not saying that one bank is better than the other. I'm merely looking at the interest rates, the rate that you pay back over time, and what's the best options for you. Doesn't mean you're going to get finance out of one of these. I'm just going to start in this alphabetical order. So AIB, okay? We took a car, 25,000 euros, right? Simple as that. Repayments over 36 months. With AIB would be 787.75 per month, so the total payable back would be 28,359. If you did the same thing over 48 months, you would pay back 29,532 at 615.25 per month. On Post, yes, that is your local post office. They do car finance, believe it or not, personal loans and things. Yeah, on Post, 25,000 euro car again. 36 months be 784.56, so slightly cheaper than AIB. 48 months be 611.50, slightly cheaper again. They're 8.1% fixed nominal interest rate, and the APR is 8.4. Okay, so if you fix in, it's 8.1. If you let it go flexible, it's 8.4. Total cost over 4 years of credit, amount of credit you're actually going to pay back extra, is 4,351.87. So you pay a total of 29,351 euro 87 cent for your 25 grand car. That's over 4 years. That was a good rate. It was one of the better rates, actually. PTSB, permanent TSB, 25,000 euro car over 36 months, 789.19. The total cost of credit will be 3,410 euro over 36 months. The APR is 8.8%, but that's variable. Don't know what that's going to be. Over 48 months, it became much more, weirdly, PTSB will do a 60-month version as well. €512.91. Total cost of credit is €5,774. So a 25 grand car becomes a €30,774 car. KBC over 36 months, €762 per month, 6.3% APR, which is pretty good. That was fixed as well at that, so that was bad. The credit was €2,432.79, so a total of the car is €27,432.79, which was a pretty good rate in fairness. 6.3 was not bad. It's also 6.3 on a 48-month contract. It's $588 per month. You still pay about the same. Now, a word to mention here, another group called Avantgarde, or Avantgarde? That Garde or Card? Avantgarde.ie is another one. They're in partnership with Unpost. They claim to be Ireland's lowest rate on loans over 20k at 6.1% APR. That's pretty good. 6.1 is a little bit less than the 6.3 you pay at KBC. Over 36 months, our 25 grand car is going to cost us $759.42 at an APR of 6.1. Total cost of credit is $2,338.98. Over 48 months, that becomes $585 per month, and over 60 months, it becomes $482. But the cost of credit still remains under the 30 grand, $28,929. You can use the loan repayment calculator to figure those ones out yourself. I'm reading that off a page. All right, last but by no means least, I have a chart. We've made a chart. So what we've done is we went to a price comparison website. We actually chose bonkers.ie. It's one of the most popular price comparison websites. And what we did was look up a €25,000 personal loan over 5 years, just to figure out if we could find some way that was a better option for you than actually taking a personal car loan. Now, a personal loan isn't secured on a car. You can buy things with it, obviously. You can do more. You could get a €25,000 loan, buy a €20,000 car, and the other 5 grand you go on holidays with. That's up to you. It's insane. It's the most expensive way to have a holiday in the history of all time, because you're going to pay interest back on a holiday for the next 5 years. You're going to pay for a holiday. So we went into Bonkers and we put in €25,000 over 5 years. Right? That's pretty much it. I just wanted to see the variance. There's a lot of variables in personal loans. You can get as much as you want. Some of them allow you to have up to €75,000 in a personal loan. And some of these are only available if you're a current customer of the particular bank. You may get a better rate if you're a current customer. Anyway, the best rate on this site was Avantgarde. That came out at 6.1% APR. The car will cost you €29,069 over the 5 years, and your monthly repayment will be €484.48. That's the most affordable rate. Next up is KBC Bank. KBC gave me a 6.3% APR, but it's fixed, which is good. That's like Avantgarde. Fixed is good. Fixed is very predictable. Okay, so you fix in an interest rate, it's the same interest rate over the life of the loan. Okay. If you go variable and the Central Bank of Europe goes bleh, or whatever happens in the world, and your interest rate goes up, well, on a variable rate, you'll go up with it. Well, yeah. Fixed KBC, 6.3% APR, €29,208. So €486.82 per month. Next up was Bank of Ireland, our own bank as well. 6.8% APR, €29,560.46. €492.67 per month. Pretty good. And again, that was variable now, not fixed. So that one, beware. When you see the word variable, it means it goes up and down. Investments can go up and down. Anyway, Ulster Bank came up next at 6.9, so only 0.1 of an interest rate. But the difference is this one is fixed. So 6.9% APR fixed over the life of the loan is 5 years. €29,631.08. and €493.85 per month. That was Ulster Bank. And AIB is next up at 8.95% APR variable. 31,000. Once we're gone into the 30 grand for a 25 grand loan. Anyway, €31,101.15, costing you €518.35 per month. And last but not least was the incredibly high APR from PTSB. 10.5% APR variable as well, costing you €32,240.85, €537 per month. That's just an insane number. But Bonkers was obviously giving preferential treatment to who gives them the best discount, which is Avantcard in this case, and Avantcard seems to be the best one to get online as well. So if you want to just look at a loan calculator on their own website, they'll give you the same rate. You don't have to go to Bonkers. So it looks like there's not much in that for Bonkers. The ones we didn't look at, which is vitally important that I mention all these, we did look at them, but they were too hard to work out. So because they do finance down to their own particular car, and that's the car companies themselves. So most car companies offer some sort of a finance package, but particular car companies offer ones that they have invented themselves and have had backed by a bank or just do it in their own bank. The problem is it's very hard to quantify. So Skoda offer finance rates that are different on an Octavia from a Superb. Volkswagen do that with a Golf and a Passat. So the rate is actually different on the actual car, not just because it's a car or it's a value, but it's because it's that car. But still worth to mention, one of the clearest ones we could find was Toyota Flex. It's finance.toyota.ie, pretty straightforward. It's a really straightforward website, nice and easy to navigate. You can figure out what kind of rates, what rate is on what car, what offers are coming up. I like that one, that was pretty good. Not saying the Toyota cars are the better ones or that finance option is the better one, but that actual unit was pretty good. Volkswagen offer the broadest range of things, so they offer PCP, hire purchase, used car finance and gap insurance from their systems, and that's run totally from Volkswagen Bank through each individual place. Again, sometimes we've seen with Volkswagen 0% finance, which is the one to go for on the PCP rates. If you can get 0% finance, you're doing pretty good. But I've seen 0% finance on something like a Golf, and I've seen like 7.1% on a Passat, you know, so the variance is quite large. You need to do each one individually. Ford Credit is worth a mention here as well. Ford are backed by Bank of Ireland. They do PCP and hire purchase options. Again, variable across each one of the products. And then last but by no means least is Renault Bank. Renault Bank offer a vast variety of options for you to go from and different products to choose from. And again, they do that same interest rate relief on different brands of the car because they are their own bank. They're very good. I've had no complaints from any of the car company customers. Have not got in touch with me to complain about their service, so I can only assume that their service is okay. I've had complaints about multiple other multiple other banking institutions problems. I've seen PCP problems. Look, the big takeaway from this is PCP is much more complicated than you imagine it is. It's made to sound simple, but it actually isn't simple. It's much more rigid. You are very pigeonholed in that PCP deal. You're not so pigeonholed in a personal loan, and you're definitely not pigeonholed in a hire purchase loan. You just got to pay the money back. It's all it comes down to realistically is the money coming back. PCP looks like the cheapest monthly payment. So every single month you only pay 200 or 250 or 600 or 800, whatever it is, but it looks very cheap because you have a balloon payment at the beginning and a balloon payment at the end that's balancing up the difference between the two. Things that can go really badly wrong is if you go over your mileage allowance or the car becomes very heavily damaged over time. That can really affect that last balloon payment. Not so much of an effect on the hire purchase agreement. You still got to pay the money back. If the car burnt out tomorrow, you still got to pay the hire purchase loan back, okay? But they're all the same. Finances is all the same. You've got to pay them back one way or the other. That's it. Hopefully you've learned everything you need to know. Please leave me some comments down below. If you haven't seen any of these videos before, subscribe. If you want me to do something else, we're looking at importing cars from the UK. We're looking at insurance scams. We're looking at getting insurance in Ireland. We're looking at ways of paying tax in Ireland. But these all take time. They take a long time to make. This took myself and my wife 6 days, 7 days of research, just morning and night, just trawling through websites and trying to find out stuff. It takes a long time to do that. And so a YouTube video like this can end up taking 2 or 3 weeks of planning at a time to try and make them. That's why they become expensive. This is not financed by anybody. This is not financed by a car company. I don't get a cut from any one of those banks. I'm not giving you an influencer code at the bottom to get 10% discount of anything, nothing like that. So I rely entirely on your kind words and funding, and at least subscribe. So underneath this, there's a list of links where you can support this channel, but at least hit the subscribe button. That's really all you ever have to do. Thank you very much for watching. And until the next time, I will see you on the far side. Now, I need to lie down for a little bit. That was very tiring. I haven't any limbs up yet. Maybe a hot whiskey. Please hang up and try